So we all know the coronavirus has had a big impact on the global economy. So in the most recent premium newsletter we emailed out to our customers, this is kind of our entire analysis and process in terms of what we think is going on with the current economic climate. So this isn't really a crypto newsletter per se, from the last few days, but this is more on our overall perspective on the economy and why we think it's pretty bearish. Okay, so this is an example of what you can expect when you subscribe to Token Metrics. So it's not just the platform and software, it's also our analysis and commentary. All right, so we kind of start the email off by saying, based on historic volatility, let me see if I can zoom in here, right? A 7% loss in the S&P 500 equates to losing 41% in BTC. So that's almost 6 times as much. So the volatility in the S&P 500, or basically the stock market, versus crypto is about 6x. That's pretty huge, all right? Now, so how is the entire economy being impacted? We know the US is now really at the forefront of the entire global pandemic for COVID-19. On April 1st, we had over 210,000 cases, and it's now way beyond that. And at the epicenter of that is New York. Now, how is this affecting the economy? Well, looking at the global GDP, right, the gross domestic product of different countries versus the growth in 2019 to the forecasted growth for 2020, there's a huge decline. Looking at China, China had a growth of about 6% in 2019. Now it's going to be slightly under 5%. And looking at the US had slightly over 2%. We can say maybe 2 and 1/3%. Now it's going to be under 2%. So every country pretty much is now at a standstill, at a halt, and the economy is really tanking. But let's take a look at that, right? Looking at the US jobless claims, more than 6 million people have filed for claims as the COVID-19 hits, right? This is really becoming worse than 2008 recession, right? Because the average jobless claims was about 350,000. And now it's jumped up all the way to 6.65 million. And now it's over 10 million total. So now we're now the perspective of reaching 15% or 20% unemployment seems real. It's not just something that people were talking about, but now we're basically on a collision course towards that path. So let me just kind of skip down here. Then lots of industries have been affected, right? Manufacturing has slowed down, especially in China. When it comes to manufacturing and supply chain, the Chinese industrial production has fell by 13.5% in the first 2 months of 2020. And we know China is really the big manufacturer of the world, because here in America, 70% of America isn't really a country that produces anymore, right? 70% of our economy is spending, right? America is a nation that consumes. So now that China has slowed down manufacturing, the consumption in America has to stop. So all this is really kind of a butterfly effect that affects the entire economy. Then declining oil prices, right? Oil prices, the highest they've been since the 21st century, was really almost $150 back in 2008. Then it dropped all the way below $50. Then we went back to $125. Then it dropped in 2016 to almost $25. Then it went up to about $85 or so. And in 2020, it's dropped back to $25 or so. So oil is really an industry we have to watch as well, because Russia and Saudi Arabia are now really going through a pricing war. And they're trying to really price out the US, because the cost of production for oil in America is higher than in Russia and Saudi Arabia. So they've tried to race it down to the bottom to push out the US and really become the major players in that. Then the stock markets. Whether we're looking at the US stock market, England, Japanese, they've all tanked in 2020 because of coronavirus, right? So looking at the decline, the Dow Jones has dropped almost 24%. So people's wealth is being impacted by this globally, right? People who are planning to retire are being impacted by this. Then let's scroll down here. Now, there are some big companies that have really done well in this new, in this global reset we have, where everybody's locked down, quarantined at home. So Zoom's stock price surged 25%. Skype, owned by Microsoft now, surged 20%. Now, Zoom's price, I think recently might have declined because companies like Tesla and others have really banned Zoom due to security issues, right? So even though Zoom has been doing well, it's now really in the spotlight. I believe their traffic was up 6x. I think I saw an article earlier this week saying their traffic is down 6x. But companies that really can survive climates like this are really companies to keep an eye on, right? So Zoom, Skype, Clorox, right? Lysol, right? I would say maybe even Procter & Gamble. So, I mean, there are companies out there that are still performing well. But if we look at other companies like, I would say the airline industry, the travel industry, let me see if I can pull up an article here. We had an article from, let me just see if I can pull this out. Just give me 1 second. Okay, so this is, so most of the items we have are really coming from BBC in an article they had. Did we talk about Clorox? Okay, that's not really it. But I saw somewhere that travel industry stocks have been decimated. They're down almost 60%, some even 75%, which is pretty insane. I mean, if people are losing 75% of their wealth in a stock, I mean, that has a long-standing effect long term. That's not just something you can just get out of, right? That's something that's going to take a long time to recover. So let me see if I can find that exact article, because let's see, United Airlines, I think, is the stock that's been decimated. Let's see here. Right? Okay, let me, how do I? Okay, so their stock price in the last 6 months went from a high of, actually, let's do the last 1 month, right? Went from $50 to $22. So more than half of the value has been gone. And it went from about $90 now. It dropped down all the way to $21. So then it bounced back up. Now it's going back down. So, I mean, this is United Airlines. Let's do Delta. Let's do Delta Airlines. Right, so Delta has also been affected drastically. So from about $43 to $22. And then Warren Buffett recently sold his shares in Delta and Southwest Airlines. And we all know Warren Buffett is the hodler of hodlers. So when he's selling, I mean, the market is really watching, because he said earlier in the week that he planned to hold. Then he just abruptly sold. So there was definitely something that caused him to sell, right? He sold $314 million in Delta and $74 million in Southwest Airlines. And he didn't really give a reason for the sale. So if the value investor who typically holds for 10 years is selling, there's definitely something to really keep an eye on, right? And then, okay, so back to the letter. Right. Then we also have lower bond yields. So all these things are happening at the same time. And we have here in bold, Bitcoin is not a hedge against every global meltdown. As we've mentioned before, Bitcoin is really, in our opinion, a hedge only for political risk and currency risk. It's not a hedge against everything. So until those two things happen, until we start having hyperinflation and we start having governments trying to tax more people and confiscate people's money, we don't really think Bitcoin is going to become uncorrelated with the market. So that's definitely something to keep an eye on, right? And this quote I mentioned earlier about the S&P 500 basically having almost a 6x correlation or impact with BTC comes from the CEO of Bitwise. He posted that in a tweet early in the week. So the question now leads to us asking, how will crypto fare in a recession? So we're basically going into details on this. We're saying 70% of the U.S. economic output is directly spent on consumer spending, and that's going to be affected, right? So the currencies we explore are Bitcoin, Ethereum, and XRP, and we say that Bitcoin will likely be independent of the broad market pressures because people can view it as a store of value, right? Bitcoin really has that use case. But on the other hand, when it comes to Ethereum, we think Ethereum is far more likely to correlate with the market or to be impacted by the market overall because you have companies building on top of Ethereum. These are blockchain companies that have to hire employees, developers, marketers. I mean, so pretty much all the ICOs that back in 2017, 2018, I mean, those are the companies that are building on Ethereum, even the now DeFi companies. So these companies have to meet payroll because nobody's buying tokens really right now. So how do they meet payroll? So we think because of that, they'll be more greatly impacted than Bitcoin itself. Then we go on to talk about Ripple, XRP. Somebody asked about XRP early in the show. XRP is really different from Bitcoin and Ethereum. XRP is really used as a medium of exchange between different banks, even though the token doesn't really have much value, right? Versus the company itself, we think because of that, it won't really be directly correlated with what's happening in the market, right? But XRP's price is also highly dependent on the issuance and adoption of it. So, I mean, all in all, that's kind of our summary on what's going on with the economy. I mean, so in conclusion, there's a temporary freeze on the entire global economy and market. Manufacturing has slowed down, oil is down, stock markets are down. Lots of sectors have been hit from travel, retail, manufacturing, but there are still some stocks that are doing pretty well, right? Like Zoom and Skype and others. And cryptocurrency can be a safe haven, but it depends on the cryptocurrency you're holding, and it depends on really its utility, on how it's being used. So overall, in all, I mean, that's our take on the global economy. Let us know what you think down in the comments below.